Hello, everyone. This is Avi Harkishin from AH Charts. Let's take a look at Mara. So I've been buying Mara between the price range of $15 to $16. Been accumulating there. We ran up to 1927, I believe. Came back down to somewhere around 15 something, and I accumulated more shares on Friday, and I posted Mara chart in the Discord, in the long bias, on our watch list. And this is the reason why I bought more Mara on Friday. So I'm gonna go over Mara for a bit and tell you what I'm looking at. So I saw Mara, and let's go to the this chart here. Mara came down on Friday, and we came right down to the high volume node on the daily chart. There's a lot of activities within this range. Mara broke out, it came back down, retested this range in the high volume node. When we got there and I saw this price movement on Friday, I got into a bit more shares on Mara. Now, there was always a possibility of Mara gapping down from this range over here and come back down to support. That I didn't want to see. I didn't want to see that happen, but because we were trading right in this range, I got into more shares in Mara because we came back down, retested this range here. And as I was looking at the Elliott wave setup on this, we had a wave one, two, three, four, five, and we had that pullback within this range. I was now expecting another setup to test the top of this range that we're trading in. I'm going to show you that range. This is the range I'm talking about. We've been in this range here, which is like a bull flag. So we keep bouncing within this range. We dip below this range, and usually, whenever there's a reaccumulation taking place, a Wyckoff reaccumulation, you tend to see a dip below the range. And as you can see, there was a lot of accumulation taking place over here on the volume profile. So there has been accumulation taking place right here as we dipped. That was a fake out to get a lot of those buyers up here, to shake them out of their position, pretty much. And then we went back up again. We moved back up. That's something you typically see within a Wyckoff reaccumulation phase. And if you're not familiar with what a Wyckoff reaccumulation phase is, here it is. You have your channel right up here. You dip right at the bottom, get a lot of people out, and then you move back up within a sort of range that you're trading in. That was, I believe, that spring action that you saw right at the bottom here, and now you're in that reaccumulation phase, which you're in here for that markup. On Mara. So I think Mara is one of them that's going to be running. We need to get over that 32, but major level that we really need to get over is that 20, 25 range, and then that 32. So I did get back into more position here at the bottom, and the reason I did is because the high volume node, as we came down on Mara, I saw the volume drop over here on this day. Not much seller. Seller was pretty much exhausted at that point, and you got the volume drop at the bottom here. So as you got that, I'm like, all right, seems like sellers are getting a bit exhausted. So I got back into my position. It was a risky trade, but I like the setup. I like that we came down to the high volume node, and we held the high volume node on the daily profile. We're going to go over to the other chart now and show you. This here is the forecast of what I think. It doesn't mean it's going to happen. What I think can happen tomorrow next. Here is the other chart. We're going to look at TrendSpider platform that I chart on as well. So here you came down to the high volume node with the doji. I like that we stayed within this range right over here. We broke out, we retest, and we held the high volume node. And I keep saying the high volume node in the daily because there was a lot of institutional activities within this range. This range looks like a reaccumulation range. Came back, And we held this range, and today we start move up, and I want to see a hold above this resistance over here, because you keep getting smacked down every time you get towards these level over here. And the next big major level is up here, which we got to get over, this 20 something dollar range. We got to get over that. And if you look at the 1 hour chart, you can see on Friday or the previous session last week, the amount of accumulation that was taking place at this range over here. Look at the high volume node on the 1 hour, and look at this entire, look at the activities here at this price. Within a range you're trading, there was a lot of accumulation taking place within this range. So I was looking at all of this and I'm like, okay, something is going on here. And I like this because one of the things that I like about it is that we came back down from the bottom here to the top here, and we did a perfect between 0.618 and 0.786 retracement, and you got to that discount zone with lots of activities taking place here. And I saw that, and I got into more position. Now, what's with the mistake I made on my end? I should have gone heavier on my position. I did not go as heavy as I would like to. I wanted to see a break above the daily 200 EMA before we go heavy, because there was always a possibility, the way cryptocurrency was trading, that we could see more downside. But at least I still jump into my position. I added more to my position, and let's see what it's going to do now. But I'm a bit optimistic here. If we could start closing above this resistance and we could hold this level, I think you could see a push up, because look at the volume here within this range. Look at the volume, especially on the green days. Pretty nice. So I think you can see price start moving back up within this resistance level, at least that 20 to $25 range. I think you can start heading into. So I want to see more volume pump on today. Don't want to see a sell off. There's always risk involved in this, but currently I like the setup for retesting this range on top here between 20 to $25 range. All right, that's it for Mara. All right, guys.